Hello, everybody. Hope you're having a great day. We had another very exciting day in the stock market. Today, I'm just going to go over the SPY, the S&P 500. We were up almost 2% today, and it was a very, very nice rally. The morning ended up starting off a little slow with economic data not being very positive. We had a slowdown in job creation, and it spooked the market. That and then Microsoft, who ended up 0.79 for the day, released a report saying that they were lowering their guidance for the year, and it really spooked a lot of investors. And we started the market with a pretty steep downturn, and then we just turned around and buyers were strong, and there's anticipation for the splits with Amazon and Google that were both up over 3%. Apple had a very nice rally up to 151. Tesla at one point was up 6%, but closed the day up 4.68. Very nice participation from the financials. The healthcare, not a surprise. They have been performing a little better than the rest of the market, so it's not a surprise that they were down today. And much needed relief from the energy sector being down. Energy sector, even though there's a lot of investors in there, we don't want energy to be expensive because it is a big contributor to inflation. But going on to the S&P 500, the SPY, just a couple of things that I want to go over here. I do want to caution you, this is the first zone is that 420 area that I thought that we would have issues with. The two zones that I thought that we would have issues with are the 420 and of course the 430 area right here. The 420, just so you kind of understand where I'm coming from, if we take a Fibonacci retracement from the very top of the all-time highs to the very bottom, the 38.2 is right here on that 420 area. That's why I say that 418, 420 area is such an important area. That's where I think that there's a lot of reasons why we would get rejected. If we do break that 38.2 area, if we do break past that 420 zone, I do think that 430 zone will be even stronger resistance. That 430 zone is the 50% retracement on the Fibonacci, but we also have the 50-day moving average right around there. And we have the bottom of what would be the trend line right here. If you count this as a false breakout here, then that would be the trend line right there. So the 420 area, some of the things that are telling me why we should get rejected at 420 would be there's this gap here at 405.31 that needs to get filled. I'd rather fill it sooner than later. Even though I like the accounts to be green, this big green bullish candle here was unwelcome for me. I wanted to fill this gap. I wanted that gap to be filled before we continued up. I wanted to come all the way to that 405, not because I'm in a short, not because I'm trying to play the downside. The chart just looks better when we go down and fill that gap and then continue up. That would have been the ideal situation, but now we moved up to the 420 zone, and I just fear that the gap needs to get filled. We're pulling too far away from the 20-day moving average. When we pull so far away from the 20-day moving average, it's just more likely that we're going to retrace back down to the 20-day moving average, and it's still not even pointing up yet. So it's worrisome for me. It's enough for me to not want to hold very much overnight. There is something that needs to get pointed out, and I'm going to put this chart on the hourly. And if I draw a line here, you can see that the price action is moving up. The price action is moving up on the 1 hour time frame. But if we look at the RSI, we could see that it's not moving up. it's moving the opposite direction. This is what's called a negative divergence. Negative divergence is followed by negative stock movement. It's followed by a drop. We don't know how steep of a drop it's going to be. It could be a little drop, it could be a big drop. But when you have positive divergence like this, where the price action moves at the same rate as the RSI, then you have more likelihood of a stronger movement. But when you have a negative divergence, you have the more likelihood of a drop. If I go to the daily chart, some of the examples of negative divergence is right here. You have the price increasing, but you have the RSI dropping at the same time. You see that increased price and that decreased RSI followed by a drop afterwards. That's just the way the RSI, the indicators work. And on the hourly chart for the last 3 days, we do have price action going up with the RSI going down. It's negative divergence. So I just want to take the time to caution you guys. Be leery. I don't trust the market yet. I would like to get to that 430 area before I start feeling comfortable holding. With a year like we've had today, you need to understand that in midterm election years, the low of the year comes in the second half of the year. The second half of the year isn't until next month. So continue to take profit when you can take profit. Try to make profits day trading instead of swing trading. If you're dollar cost averaging into your long positions, I think this is a great time to do that. If you're on a longer time frame where you're investing for your retirement 30, 40, 50 years down the line, this is a great time to buy stocks. But if you're wanting to turn a profit in a week or two, this is not the right time. It's day trade or invest right now. There's not much in between. And I'm only saying that to try to keep everybody safe. I do see bullish aspects of this chart. The bull case is strong. I do think that we will have a little bit more continued rally all the way to 430 before we turn down. But I am always prepared for tomorrow to be red. Futures are green right now. Everything looks good right now. But I do warn you again, the max pain for the day for the week on SPY is at 410, and we're already at above 410. We're at the 417 level, which tells me Friday might be a red day. So be cautious out there. I wish you luck, and continue to communicate on the Discord. Help each other. HaiKhuu is here to make everybody better and help you navigate through these times. Have a great day, guys.